Hello, everyone. Welcome back to another episode of the Shared Housing Alliance. And we have moved that name from the Shared Housing Academy to Shared Housing Alliance. So just keep that in mind if you take our 12-hour paid class. And then you also join our private Facebook support group. Anyhow, I have Jay Gunfire on with us, and we are going to talk today about normal, quote unquote, individuals who have a need for shared housing because their credit is in shambles. Maybe it's their own fault, maybe it's not their own fault. So I'm going to let Julie actually chime in because she, being a retired police officer and having investment properties and shared housing. Julie, what do you have to say about this topic?
So I'm glad we're talking about this today because I get approached a lot about a lot of, obviously the current market right now is so flooded with twice the amount that was asking even a year ago. The rents are so high now, and the demand is so high that people that are looking for places to live, and we're not even talking about affordable, we're just talking about people need to go somewhere. They're leaving the place that they're at, and you were just talking about whether their fault or not. They need a place to go, right? Well, it's my credit isn't good enough. I've been trying to find a place, and they're picking the best ones out of the batch, and I'm not the best one, but I need a place to live. What do I do? How do I get myself into something? And I'll turn it back over to you, but that's basically what's going on. And it's not just the people that have hit rock bottom. These are people that are professional, working, and have income. They just don't have everything lined up in a row, and they need a place to go.
Absolutely. So there's two things that come to mind. If you have an Airbnb or a rental or any kind of property like a 2 unit or something, and you think that you are going to offer that as house hacking or shared housing, I want to point out number one, we are talking about people on Craigslist. And so that is a direct to consumer market. And that's exactly what we're talking about here. We're not talking about direct to the government or working through something like that. And this is really important because I had a gentleman contact me this week who he said that his now ex, wife or girlfriend basically handled all of the finances. And they have 3 children together, and she got addicted to prescription painkillers. He knew this was going on as far as like her behavior was changing and things, but they had all of their finances were combined, and she handled that. He was served with an eviction. His car was repossessed. A constable came and said, "You have 14 days to grab whatever you want and get out." Well, guess what? He has an eviction on his credit now. He has a repossession on his credit now. There are no property managers, even though he makes a lot of money, who are going to let him get into one of the properties that they manage. It's just impossible with how competitive it is with immigration in particular. A lot of people are moving to the United States. And so that is what we're talking about here. And that, my suggestion to that individual, even though he does not want to do shared housing with his 3 children, if he is not able to repay his past due balances and get a motion to vacate that eviction, which is just going to be by the grace of God and the judge. Hopefully, the judge is having a good day and is willing to reinstate his lease.
Which, as a landlord, I don't want you back, because if you haven't paid for that far back, or even 2 months, I don't want you back, you know?
Yeah, I agree. Even at Katie's House Foundation, I'll tell you, if you spot pay us, we don't
Not the
really
best candidates, right?
not
I mean,
we
we
have
all
other people knocking and applying every single day, and they have Social Security disability income that comes in like clockwork. And
well,
they
and I'm sure this person that called you makes the money in the house. He just wasn't he wasn't a financial, educated person, and he trusted somebody else. And that, I mean, it's a whole nother conversation to trust your investments with other people. But I just think that, you know, in this case, if he, even if he went back to the judge, me as a landlord, and I was in that courtroom, or I had my attorney, I would tell my attorney, under no circumstances do I want this person back. It's whether it's her that was running it or him. I don't know that. He
Right.
can tell me that, but I don't know that. So, I mean, his best bet would be to find somewhere that he can go that isn't going to be, you know, a, it's going to be a little bit more different of an environment, but sharing the house is probably the best thing for him. Did he seem to be interested in that? How was that?
Well, it's a hard no until the judge tells him, right? So on a wing and a prayer, let's hope that the judge issues, the notice so that he can stay instead of vacate, because there's 3 children involved. And the thing is this, every property manager in that city is going to be looking at his credit report, and they're going to look and say it's a hard no. There's no extenuating circumstances that will allow me to let you into one of my apartments or houses. It's a hard no on a recent eviction plus a recent repo. So the only options become a shelter, a public shelter with 3 children, with God knows who is in there with you. Probably good people, probably some people that are not so good. And, he just needs to get his kids to school on time, which is a regular thing. Great children, I'm sure. And he cares about his work. He cares about his children. So he needs a new normal. And the new normal would look something like going on Craigslist and looking for a room to rent. And, I went on in the city where he was located, because it's not a city that Katie's House Foundation currently has houses at. And I found a house, just a regular person, just so you know, pulling somebody's credit all by itself is not something that normal people have access to. The credit bureaus and the government, they don't let just every homeowner who's going to rent a room get a vendor account. You can't just sign up with Credco and pull every Jack, Jill, and Harry their credit. You just can't. It's private information. You have to have a corporation, and you have to have a housing related purpose. So you're a bank who's lending money, or you're probably like Katie's House Foundation, and you can pull people's credit report. But the point is this: if you're renting a room, and in this case, I found a house that was a 4-bedroom, 2-bath. The woman, it was her second home, it looked like. She kept the master bedroom to herself. It had a garage, and I don't know if that was available, but it sounded like it was based on the Craigslist ad. And she had 3 rooms available. And so this gentleman who contacted me, I encouraged him to basically secure 2 of those rooms on a month to month, and to keep in mind that today he's living in an Airbnb. Right now, today, he had to move out in 1 hour or he was going to be homeless. He could go to another Airbnb, which was 3 times what he could afford, had no longevity. Or he could call this woman who wasn't going to pull a credit report. She didn't want to. She didn't have the ability to. She just wanted someone who was going to pay her and take care of her house. And so in that fashion, he could probably secure 1, 2, or 3 bedrooms for him and his 3 children, park his car, have his tools, and get his mind back in good order, save some money for, let's call it month to month, for maybe 6 months. And then he could consider what the next step was. What do you think about that?
Or take the time that it takes to apply at some of these places that he wanted to live at. I mean, because that's part of the problem. I've got a friend right now that's got a roommate, and he wants her to move out, but I really don't think that she hasn't been in a big hurry to move out. And the problem is that now it's even higher prices than it was. And I keep he's come to me again, and he's like, I got to have this conversation. And I'm like, yeah, you do, because I don't think she's going to find anything by the date she gave you. So, he's looking forward to end of October, but I think it might take him a little bit longer to get her somewhere else, or her to find somewhere else to go. She's got the same, she's sharing a house right now, but he's saying, I need my house back, and there's not a whole lot of options for her.
That's really what we're talking about throughout the United States. I will tell you, I have been running numbers on what the average American makes. And, I do land development. We're getting into now building houses, and we are looking at the affordability perspective, not, people wanting to make 30% on the investor side or 20%, which of course investors do want to do that, private equity. I get it. Let's first look at what someone can afford. What's $15 an hour, which is pretty much the going rate, maybe $20 an hour over 2,000 hours in a year, let's call it. And then look at a 45% ratio on that. I'll tell you, you're looking at someone making around $25,000 or $30,000 a year throughout the United States, even less on Social Security income or disability income, unless they're VA or police. And so if you have two of those at $30,000, that's a $60,000 income. And that's going to be typical for somebody. So you're talking, really, most property managers want 3 times the rent.
Or landlords.
Yeah, landlords.
We want to make sure you can pay for your rent and everything else, because typically there are people out there that decide that rent isn't maybe going to be their first thing this month, that they need to keep their car. And if you're not making enough money to cover all 3 of the most major things that you need, and we're not talking about, our society's gotten into a kind of a bad habit too, where our luxuries are now our necessities. And so I think in the next couple of years, a lot of these luxuries are just that. They're not necessities anymore. So
I would agree with you.
I think, having that ability to pay and to buy that house, yeah, you got to look at the prices.
So let's just say, right, somebody's rent or mortgage is $2,500 a month. And if you go normally to someone outside of renting a room, they are going to be looking for 3 times that. So $7,500 a month gross. That is just completely out of, right? You're talking $90,000 a year times 3 times 12. That's $90,000 a year on the average rental of $2,500. And so I know if you go to some low income pockets in the United States, you might find rent at $1,200, $1,500, $1,700 a month. But those are going to be in those areas that are not the districts where you want your kids to go to school or grow up. And Julie, you and I look, right? We look at the crime and we look at those rents, and this is the gap that people are not really taking into consideration. And so when I see things like somebody's got to fix this, I don't know who, but somebody's got to fix this. We need to start talking.
If you want to watch the other show that we make, which is the Normalized Money, we just talked about that song that talks about what we're being inundated with ads. As a society, we're not making good decisions and we're not doing good things. And that's where, I don't know who's going to fix it and I don't know how, but we definitely all need to be a little bit more, educated in the sense that where's the big picture going here. And you and I see these big pictures, and that's what we're talking about here. We're talking about it's hard to say, but yeah, and making $90,000. And I don't know how you guys in California, I grew up in California, and I know that the prices out here are so high. I don't know how just your normal everyday person gets by.
Well, I'll tell you how. You have to have 2 people making $90,000 a year. One of them to pay for your $2,500, which it's not anymore, because $2,500 mortgage with taxes and insurance.
Not here.
It's almost not anywhere in the country right now.
In the Midwest, no.
Yeah, a 7.5% interest rate, or even a 6.5%, which is considered competitive by FHA and VA right now. you have to have two people making $90,000 a year, one to cover the mortgage, one to cover a little bit more of the mortgage, and then also their additional income goes towards food and things like that. And so this is actually an interesting, it tilts towards more like immigration and people coming here on visa. Corporations are paying for people to come here on green cards who do software and things like that, like coding, because they get paid normally $250,000 or $300,000 a year, and they're coming to our borders, which is now shifting people into the United States for more affordable housing. And so we'll just have to cover that another time. But the point is that the amount of influx of global migration is going to continue to impact shared housing. And this is why we need shared housing. My takeaway from this week is that people on fixed income don't have a choice. And if you have bad credit, you also probably don't have a choice than to look on Craigslist for someone who will rent you a room or two. And you might have to ask your best friend, if you're 75 years old, if they want to have a room with you, not at an elderly care facility. Heck, maybe you're only 55 years old and you and your best friend want to have a room together. At least at Katie's House Foundation, it's going to be a beautiful house and you will love being there. And we hope all the investors who are listening are going to take our class and make sure that their houses are most excellent and follow our standards, because I don't really, honestly, I don't see any other solution other than if you want to sleep on the floor inside a cruise terminal because the shelters are overflowing. So
well, and don't forget too, you talk about, like a lot of us have worked all these years, 30 plus, some of them 20 plus for sure, right? And you still have to work because you can't afford enough and it doesn't go enough to pay all the bills. So just to enjoy life a little bit more when you get older and not have to go to work, this is a must.
Yeah. I know that we have some people on Social Security income making $1,300 a month, and they're at that age where they just can't work.
Yeah.
And that is why they have to come to Katie's House Foundation, because they would rather have a 4-bedroom, 2-bath with a couple roommates who have been screened out. And that's the end of it. They don't want to be out on the street living in their car or living in a public shelter.
Yep. Yeah. So, I know we're talking to the investors here. So, we're not talking numbers on the side that we make you excited. We're talking on the side that this is reality. People need this. People need the ability to afford where they live. And this is definitely a way for us to, as investors, make the money that we can make, and still show a profit, but give back to the issues of the societies are having to help solve them.
Yeah. So we have just 30 seconds. And on that note, I just want to say, right, it is for the investor. If you do have an elderly, let's call it senior housing, and you have one house with 4 bedrooms and you charge, right, $600 for a bed at 2 beds per room times 4 rooms, that's $4,800 in rent. And that's the thing. I don't know what your expenses are, what your mortgage is, you have so many expenses that go into that, which is why you should take our class. And also you have a lot of people who live inside of their personalities and things. And so you want to have those rents coming in. But the point is that it's about helping the people so they're not homeless. Okay. I'm signing off. Julie, anything else from you?
Nope. Guys, have a good week. Next week.
Talk to you next week. Bye-bye.